G'day folks, welcome back to another update for natural gas. Now this is also a combination with a +1 video. We're going to be introducing a new strategy. But first of all, let's go back to the natural gas price. Now there's still bearish momentum in the charts, but do watch for a bounce. There is a bullish divergence in play. In terms of the +1 video, we're going to be introducing, still talking about the CCI14, which we've introduced previously, the CCI350. And today we're introducing another strategy for you, this simple moving average 20, moving average 200, and moving average 800 strategy. The primary focus here is on the commodity channel index, which is our main trend indicator. So in terms of looking at the outlook first off for natural gas, the supply-demand balance remains tight, especially in Europe due to low storage and reduced Russian flows. Asia's demand is soft overall, but heat-driven peaks during summer are sustaining robust LNG flows. US natural gas output is stable, yet drilling activity has slowed. Infrastructure developments and LNG growth are shaping longer-term supply potential. Geopolitical dynamics remain central, with transit disruptions, major export agreements and regional conflicts all influencing markets. Now, before we go into the charts, let's just quickly look at some of the macro rules, and these are a must. So you must follow these three main rules. Rule number one, determine the trend direction of the overall trend. So for example, if you're trading on the 1 hour, you follow the trend in terms of the direction of the daily. Rule number two, we trade in direction of the CCI150 and fresh breakout from the CCI moving averages. And step number three, close a trade when the CCI150 enters the CCI150 moving average band. Okay, let's look first off on, this is the natural gas price. We'll look at the long-term trends, the weekly, the daily and the hourly. So let's assuming we're trading on the hourly price chart, we look at the direction of the daily trend. So you can see here I've marked here with an arrow. You would have started going short predominantly during that period of a downtrend. Now you'll notice here the moving averages continued declining, even though we had a bit of a false break above the moving averages at that point, also indicated by the CCI, but on the price the moving average band was still declining. So it's been a nice declining bearish momentum on the daily, which means we only take short trades on the hourly. Now, what you would have done as well, at the very latest, so that's the first rule, you trade in the direction of the daily if you're trading on the hourly. The second rule is you close out the trade on the daily, or on the hourly, if the daily hits that moving average band. So you would have got out of the trade on the hourly at that point when the CCI touched the moving average band, which was on that candle there, right near the bottom. And that saves you that slight rise. If you're going short, that would have saved you that slight rise and losing profitability waiting for it to break into the moving average band of the price. So that's the first thing. And then you would have entered again short on that candle once the moving averages of the CCI and the price broke below the moving averages again. You would have started going short again and closing out again there on that candle there. So that's the rule number two. And rule number three is if you see any sort of divergence on the 1 hour chart, be careful and probably close out any short trades in this case. Now you can see here at the moment we've got a slight bounce on the CCI. There's no divergence. That's moving in line with the price. That's good. So let me just go back here and find if there was any divergence. And it's a bit hard to see, but you can see that if I blow this hourly chart up for a moment, we had a very slight bullish divergence there. Higher lows on the CCI versus the same period, lower lows on the price. That was a bullish divergence and the price did hit and bounce. Now we don't go long there, we simply close out any short trades, and that gives us an early indication to close out the trade, especially if you see a bullish divergence in that case. At the moment you can see there, you could argue that's also a bullish divergence at the moment. Higher lows on the CCI versus slightly lower lows on the price, and that's also bouncing. Now in terms of a minimum range of retrace, we take it back to the recent high. You can see there it's already hit that 38% minimum retrace. That's a minimum. More than 90% of the time it hits that range. What we can also do is extend it to the more significant high. You can see there it's actually just touching that 23% there. Looks like it's still rising possibly. So again, to continue trading this, don't go long. To continue trading this, wait for the hourly here to break below the moving averages on both the price and the CCI, as long as the daily's in a downtrend still, to take further short positions. So now we look at the micro rules. So the macro rules is basically our general trend, and the micro rules is the strategy you want to be trading. So here we can look at three different strategies on the micro rules. So strategy number one is the CCI14 strategy, which we've covered previously. So we enter when the CCI14 crosses over the zero line, take profit with a 0.3% gain and average down with a 0.5% drop. And the CCI14 also crosses over the zero line, which was the entry parameter. Strategy number 2, we're looking at the CCI350, which we've covered before as well. And the entry is when the weighted moving average 100 of the CCI350 is in an uptrend, take profit of a 0.3% gain, and the CCI350 crosses down from that weighted moving average, and average down with a 0.5% drop minimum, and a weighted moving average 100 also crosses over the 350, which is the same as your entry parameter. And the new strategy we're introducing today is the multiple moving average, the moving average 20, the moving average 200, and the moving average 800 strategy. So we enter when a fresh breakout of the moving average 20 is above the moving average 200, and the moving average 800 is in an uptrend. Take profit with a 0.3% gain, and the moving average 200 reverses, average down with a 0.5% drop, and the entry parameters are met again. So these are the three strategies we're comparing. So remember, we're going short because the daily is giving us a short positioning. So here, first off, we've got the CCI14 strategy, and just very basically, whenever in this case, when we're going short, so whenever the CCI14 drops below the zero line, we enter a position and we close out with a 0.3% profit. So it gives you a very small profit, but nonetheless, we get out very quickly. You can increase that profit level, but it's up to you. I'm just giving you a very simple strategy here. The strategy we covered previously was the CCI350. And again, very simply, here when the weighted moving average is in a downtrend, you can see there with that blue line, we go short, and we close it out when we see the CCI350 break above that weighted moving average. And we average down whenever we get a price going against us in the opposite direction. So if it was going long, in this case, it went long slightly by more than 0.5%, we enter another position there and go short once we have another entry position. The new strategy we're looking at today is the multiple moving average, the moving average 20, 200, and 800. So very basically, whenever the price breaks below the moving average 20, when it breaks below the moving average 200, and it's also below the moving average 800, we take a short entry. You can see there it didn't actually enter back here. It entered here once all those parameters were met at that point there. Back here it didn't enter because the moving average 200 was still in an uptrend. So you want to make sure they're in a downtrend. Everything's in a downtrend. Again, you can see there it's very conservative, and I'll show you the analysis results in a moment. So they're the three main simple strategies. So what we're looking at now, if you zoom out, I've started it going back here from on the daily when the price was showing a decline on all these positions. You can see there here we've had a few entries made, a bit of an average down there on the CCI14, and that generated about $8,500 on that strategy. This one generated about $1,400. Only a couple of trades there, very conservative entries and exits. And this one, the CCI350, generated $20,700. So again, I'm showing you different strategies because you need to decide what's your risk profile and where you're looking at, what sort of strategy you're looking at taking and what sort of risks you're prepared to take. So here's a table of results, and we use the same shares in each of these analysis just to keep consistency. So you can see here, strategy CCI14 in the first column, the multiple moving average 20, 200, and 800 is the middle column, and strategy CCI350 is this last column. So the first thing we look at is the revenue. Now, in terms of revenue, the CCI14 generated the most revenue in this case. And this is testing on the 1 hour time period. The CCI350 generated the second highest revenue at 240,000. The CCI14 generated 442, and the lowest revenue was 18,700, which is the multiple moving average. Again, very minimal entries made there. So that's the first thing we look at. Now, rather than jumping directly to this one to trade, you've got to decide what sort of drawdown you would have been hit with. So we're looking at the drawdown is the next level of analysis. You look at the drawdown is where it goes from the highest point of profitability to the lowest point. And this one being the lowest drawdown, the $10,000, $10,500 roughly, is the multiple moving average strategy, followed by the CCI350 with 169,900 of a drawdown, and the highest drawdown had 276. So obviously the lower the better. So the multiple moving average 20, 200, and 800 ranked as first. So again, just gives you an idea of the drawdown. And then lastly, we'll look at the percentage of revenue over drawdown. This one had the best percentage of revenue over drawdown, the higher the better, slightly more than the multiple moving average strategy. And lastly, the CCI350 had the lowest percentage over drawdown result. And the last thing I look at, and not mandatory, but it's something I like to do, is have more trades than less trades. So the CCI14 had most trades with 53 trades over the period, followed by the CCI350 with 26 trades, and the last was fewer trades was the multiple moving average strategy with 9 trades. So you've got to consider all those elements, and what I've done here is just rank them 1, 2 and 3, showing the CCI14 for me was the better strategy, followed by CCI350 with the lowest being on the multiple moving average strategy. So I'm going to repeat, what you need to focus on is not just the revenue, but also the drawdown. So if you can stomach that drawdown with the revenue, then that's probably something you could consider. Again, these are just numbers based on the tests we ran. So again, every stock, every instrument that you trade will have a different result. Don't forget, every chart is a fingerprint or a snowflake. It's all different. They're all unique. So you're going to get different results every time you run these tests for these strategies. But generally, if you follow the same rules for these strategies, you're going to get similar results no matter what you're trading. But on average, if you're getting this one ranking with a high, even though it's got the highest revenue, if you can stomach that, then that could be a strategy for you. Or if you want to be really conservative on the other end of the scale, a very low drawdown with relatively still pretty good revenue, 18,700. That's probably a strategy you may want to consider. And I'll keep introducing new strategies with all these. So this is another +1 video for the collection for you, but don't forget to reference the other +1 videos along with the daily strategies and daily instruments we chart and analyze for you to consider any trading strategies that suit your style. Hit that like and subscribe button, that'd be greatly appreciated. Thanks for watching, and see you in our next video.